Welcome to the Currency Room. This is Rob Reinhold. I'm joined by Ankit Sharma, and this is Maverick Currencies. We are right in the middle of September, and boy, what a great trading week we had. So let's go through it. Let's go through kind of what happened. We had an equity market rally pretty strongly, 3 to 4%, and that's a really strong rally, and we saw the risk-on things start to do a lot better. We heard from 3 central banks last week. We heard from the ECB, we heard from the Bank of Canada, and we heard from the Reserve Bank of Australia. The Reserve Bank of Australia raised rates by 50 basis points as expected. There was really not a lot of movement on the Aussie dollar. We got a 0.75 hike from the Bank of Canada. That was also expected. And then we heard from the ECB, and they moved by 0.75% and will likely do another 0.75%. The only other news you can see there is Friday's employment change on Canada. Really not all that great. So ultimately, we had lots of central bank action, and we had a strong equity market rebound, which really pushed the cryptos up. The cryptos had a great week this week. We'll take a look at all those returns. So let's take a look at the charts, because the charts are always there to tell us the truth. You and I are going to have biases. We are going to have opinions. And when we look at data, we are taking that data in through with all these biases. So we're not coming up with quote unquote the truth. We're coming up with our opinion. A chart really helps take a lot of that opinion away and get rid of your bias when you just look at a chart. So as I said earlier, equity markets up 3.5%, 4%. Look at the cryptos, a great week, up almost 7% as an aggregate. Bitcoin Cash was up 13%, Ethereum up 9%. Gold a little higher, oil a little lower, but this is just a good, solid rally. And let's take a look at the S&P 500. And last week, we had actually just started to get bearish the market. As we pulled back from this high, we started to get less and less bullish as we went down below the 20. We cut back on bullishness. When we got down below the 50, we cut back on bullishness. And we actually went to like a -1, 1.5 last week. And I thought the market was going to head lower. And I am wrong. I'm absolutely wrong. That is a big market rally. And look at those candles. Those candles are open at the lows, closing at the highs. There's no question that the money is pouring back into this market. So the question is, okay, well, what happens next? We are running into this overhead resistance. We've got this overhead resistance in this area. We're getting back into this area. We are back above the 50-period moving average, but we're still down below the 20 moving average. It's basically a fairly inconclusive market, and that's why we're just going to go to a zero. Whenever it's between the 20 and the 50-period moving average, we say, hey, you know what? This is not a real trending market. This is a choppy market or just a dead sideways market. What's your call on equities here, Ankit?
Well, I think, Rob, this week is definitely taking a lot of traders by surprise because everybody was really geared in with a bearish outlook on the markets. And again, everybody's kind of flashing the warning for September. September, again, historically being the worst month. But I think we're starting off with a little bit more optimism. So we noticed the market sentiment really improved. But again, in the grand scheme of things, this is still a bear rally. Again, I think we have a little bit more rally in this one left because the way we're closing it, I think we'll have a continuation next week. And the fact that we reversed all last week's losses, it's actually really flipping the picture to the upside again. But the big question is how far it goes. I think one thing we can really take away from these markets is that unlike previous markets where each pullbacks were bought out, I feel like right now every little rally or pullback that happened in the markets, we see these bear rallies taking place, but none of these rallies hold. So it's important to not get ahead of the markets when you're having these rally moments. But once that's over, I won't be surprised if it rolls over again. So I think September is going to be a choppy month. I think it will start off with on a higher note, but again, this could change in a couple of weeks. So I'm still bearish on the markets, but in the shorter term, I think we have a little bit more on the upside.
Let's take a look at the performance in the foreign currency market last week. Big story last week was the breakdown in the yen. The yen had a really big breakdown. We're going to take a look at this on the chart because it was a really big deal. We have broken below yearly lows, and we did that on a down period in the market. This break happened on Monday and Tuesday. not the last 3 days when the market has been strong. It was when the market was weak. The Japanese yen is no longer a safe haven currency in the eyes of Forex traders. Swiss franc, we had been talking about how it was looking like it wanted to gain momentum, wanted to break out. Well, we got it for sure this week. Nice breakout of Swiss franc. Euro was pulled up along with it. And you can see everything else was, pretty much close to the flat line, plus or minus a little bit. However, this is just a look at Sunday through Friday. Understand that the dollar, there were 3 great trading opportunities on dollar. To be long at the first part of the week, and then short at the second part of the week. We had 2 nice little signals here on dollar. So dollar looks great for a trading vehicle on both sides. And we are seeing a big correlation between the dollar and the yen. We'll take a look at that as well. As I said earlier, the cryptos did fantastic. Bitcoin Cash has been the most volatile lately on both sides. On up weeks, it seems like Bitcoin Cash is up 10%. On down weeks, it seems like it's down 15%. So we continue to see the volatility in Bitcoin Cash, but we continue to like Ethereum as the nice stable one of the group. So let's take a look at all these charts and let's get a good picture of where we think things are likely to go. We already took a look at the S&P and it's basically camped out between the 20-50-day moving average. And here we have the same thing here. We are just camped out between the 20 and the 50-day moving average. So we're back up above this level. We're running into some overhead resistance. We're running into these levels. We cannot definitively say we're any longer bearish. We cannot definitively say we are bullish. So you just have to be in it's not trending at the moment. We don't know where the trend is. And so you just throw up your hands and say, I guess we will find out later. The cryptos had a big jump. But you can see there, it just jumped back into between the 20 and the 50 period moving average. There is going to be some overhead resistance in these areas. So look, cryptos, it's nice to see them not going down almost every day. But is this a buy? No, we don't have moving averages telling us. We want it to be long over here when we are trading above 50 period moving average. It was a much better time to be long. We still need to wait for that to happen. So while the cryptos are encouraging, I think it's a little bit too early to get too excited about them. On the calendar this week, we really just have one big thing, and that's going to be the CPI report out of the US on Tuesday. Now, the headline number is supposed to drop by 0.1%. Now, remember, these are month over months. So last month, we had a fairly hot number. We think it's going to cool a little bit. But understand, we're still like 6, 7, 8% higher than last year when you look at year over year numbers. So if this number comes out and it is substantially less than negative 0.1, so let's say it comes out as negative 0.5, boy, the market is going to love that. The equity markets are going to love that. And the dollar is going to get hammered. If it comes out stronger than this, the dollar is going to rise and the stock market is going to get hammered because it's telling you that the Fed is even going to be more hawkish than they possibly are right now. I mean, they're at about 100% hawkishness here, but it's going to get worse if this CPI number is a little bit higher than expected. I don't really see anything else on the calendar this week that's really going to cause any sort of movement. So to wrap up our outlook for this week, equity markets, we think we are in a bear rally, but we think there is a little bit more upside to this bear rally. Could it fade on Wednesday? Absolutely. We could just have maybe one day, Monday, and then get a doji on Tuesday, and then we may fall after that because this is still a little bit of a bear rally, but because we closed so strong on Friday, then we think there's likely to be a little bit more. And then Tuesday CPI is going to be the big story. So let's jump into each currency, take a look at them one by one, and give them scores. As always, we're going to start with the cryptos. Let's take a look at Bitcoin. And okay, we've got a nice rally off of the bottom here. And here we are, we're just trading between moving averages. And we've got some resistance right here. There could be a little bit more upside. Take a look at this velocity. We're on +3s on pretty much all these cryptos. They had a very, very nice run on Friday. We talked about how Bitcoin Cash is the most volatile one, and take a look. This is what we're talking about. We plunged here. This is a 16% plunge. This was about a 22% rise. So again, big volatility on Bitcoin Cash. It is now trading above the 50 period moving average. So look, we like the velocity of them. We like everything. They're just running into some overhead resistance. That's it. They're just running into overhead resistance. So we can't be super bullish on these at all. Here we've got Ethereum. Ethereum is, again, above the 50-day moving average. That's very nice. We've got nice velocity. We just need a little bit more to get that trend score a little higher before it flashes a buy signal for us on Ethereum. But we have been the most constructive on Ethereum. As cryptos have worked their way lower, it's been the strongest one. So when they turn around, you do want to be long the strongest one. Here's Litecoin. You can see we're running into some overhead resistance on Litecoin. Litecoin's more of a sideways trend. We are above the 50. Velocity's looking good at the moment, but we're just running headlong into some resistance areas. So no clear path here on the cryptos. So let's see if we can take a look at foreign currencies to find something to trade as well. Like I said earlier, the dollar was a great trade, long earlier in the week and short later in the week. And so we are ending off more on the pullback side. If we take a look at these certain levels, again, this is the dollar basket, equally weighted against 7 other currencies. We could easily have a pullback down into this area. The trend is still up on dollar until we break substantially below this 50 period moving average. The trend is up. But right here, right now, we are getting a little bit of a pullback. So that means that this week, we're looking for this to bottom out. And then if the markets look a little weak next week, that CPI report comes out a little bit hotter than expected, long dollar is going to be a nice trade for the week. Let's jump into what I think is the big story out there, which is the fall of the yen. The fall of the yen is just a big story. And we'll go into lots of yen charts. But you'll see that these are major breaks that happened this week. Major breaks, and the breaks happened on days when the market was actually shaky, the equity markets. The yen usually benefits from that. Now, we've been talking about how the yen has been broken. Anka, what's your call here on yen? Do you think it's going lower?
Hey, Rob. Well, I think yen has been the one that has surprised me the most because every time you think it's done going down lower, and it just continues to go down. So I think yen ultimately, there's no real end in sight. I think it's so far. I mean, we had little bounces here, but I think so. Nothing has been definitive for this to kind of turn around here. So I think the yen again will have further downside until it really puts in a good bottoming price action, which again we don't have it at this point. So I think yen we just have to play it one way, which is to the downside. And I think if there's any bounces that come in between, they're just selling opportunities. I mean, we talk about, what could really stop this, sell-off. I mean, any actions from Bank of Japan, any of these other things could really stop this. But again, until that happens, I think the yen it's at this point where it's getting too extended. So there's definitely more risk. But I think it's really one-sided trade. We look at the dollar. Dollar was a two-sided trade. I mean, the yen has been just a one-sided trade. So I think I only like it on the short side. But I also want to be pointing out that if it gets to extreme levels, this is where any policy actions or anything from the central bank could also spark a reversal as well. So until that happens, I think you got to stay away from the yen, especially on the trying to buy these bottoms here.
Yeah, I'm with you. It's a one-way trade. It's a short yen only trade. Not looking for long yen at all. The Swiss franc has been in this really slow grind higher, just a slow grind higher, nothing all that fancy. And I've liked it, but I haven't loved it. I said I need it to get some energy. I don't want to trade this garbage. Like, I have no desire to trade inside of these kind of moves. I do like to trade in these types of moves. So we're starting to get some nice momentum now. It's a little bit extended. I would love to get a pullback next week, pull back to these levels or some sort of base up here. So for me, Swiss franc looks good. It just doesn't look good right here, right now. So on Sunday, I'm going to just say, Swiss franc, I need you to pull back. I need you to get some momentum back before we can really get excited about you on the long side.
Hey, Rob, I also want to point out about this whole Swiss franc. I mean, very similar trade compared to the dollar yen. I mean, we have now dollar yen very negatively correlated right now. So either one goes up or one goes down. Same thing with the Swiss franc and the euro. I mean, for the last couple of weeks, I mean, we have seen a nice rise in the euro, and Swiss franc has been kind of holding in there. And it's just a flip-flop price action. Now we see the euro pulls back, and then the money goes into the Swiss franc. So I think it's very important to take a look at which currency or which currency is in play. So I think last 2 weeks, the Swiss franc wasn't in play, but after the ECB rate statement, the euro is pulling back, especially against the Swiss franc. So I think it's important to take a look at that. And if the Swiss franc goes higher, I think the euro outlook kind of gets on the sideline there, because I think then Swiss franc is a better buy compared to the euro.
I think so. I totally agree. Very weird to say this because I had liked euro short for pretty much all this year. It's starting to prove that it wants to go higher. Again, to know it wants to go higher, what we need to see is a couple things. We need to see it reclaim its moving averages, which is now trading above the 20 and above the 50-day moving average. And we also need to see the 20-period moving average cross above the 50. So we can't say that it is ready to go right here, right now, but you can see it's starting to look like we're going to get a very strong statement from the technicals that the euro wants to go higher. At the moment, it's basing. I'm not ready to be super bullish euro yet, but it's definitely on my list. Maybe next week, if we get a little bit more follow through, I'll be more bullish on euro. The pound has been my favorite short, and we love these bear rallies. And we got one early this week, and I know I was able to take advantage of that, get short a pound trade. At the end of the week, it was an okay trade. It wasn't a great trade. It was just a nice single or a double. But anytime we see a bounce in pound or a low base breakdown, that's where you want to be. So I like pound short this week going into the start of the week. We go over here to the Canadian dollar. Canadian dollar had been really just hugging these moving averages for so long that we just couldn't get excited about it. It's finally starting to move away from those moving averages, and moving averages are actually starting to steepen now. That's what we want to see. We want to see some momentum. So the CAD is sort of like the euro. It's a little early to get super bullish on it, but you can start to say that, okay, if it gets a little bit stronger, I think it's a very good time to be bullish CAD, but not quite yet. Aussie is telling us nothing's going on. I mean, look at these flat moving averages. And anytime it gets to this top, it hits. And every time it gets down to the bottom, it hits here. So Aussie is simply just range bound. If I had to be in the trade right now, I'd be long because it's heading up towards the top of the range. But that's a great thing about trading. You don't have to be in any trade. You can find a different one or just sit in cash and wait for a good moment. Kiwi doing the same thing. This Kiwi has not wanted to bounce at all, but it also has not wanted to fall apart. Until we get a change of this, I can't get excited about the Kiwi. Once it does something, once it breaks out to the upside or down to the downside, then I can make a play on it. But right here, right now, the Kiwi is on the shelf for me. It's a no touch. So if we take a look and see, okay, what currencies are trending higher at the moment? At a +2, we've got euro, dollar, and Swiss franc. And I think this is where you want to be looking for potential trades. On the downside, we've got pound and yen. So I think you could take a look at any one of these 5 currencies and cross the strong up with the weak. But this is, again, the trend. These are the bigger moves that are likely to happen over the next couple of weeks. We want to know about momentum. Where is the momentum? Where's the velocity right here, right now? And while we like the dollar and we like the euro, they're not showing a lot of velocity right now. The one that's showing the most velocity is the Swiss franc. So going into next week, that puts the Swiss franc on the top of the board. It was a +2 on trend, and it is the highest velocity score at a +3. So I think the first of this week, you look for Swiss franc long trades, and you look for it against the pound. The pound was the weakest one as far as trend and velocity goes. And I think you can put the yen number 2, but the yen right now is at a 0, so we're going to need to get a little bit more of movement before we can get short on yen trades. So really, pound Swiss franc. Pound Swiss franc is going to be the trade to start off the week, in my opinion. So Here's the board. There's not a whole lot to trade. There's lots of almosts. There's not a whole lot there, but let's go ahead and pull out the charts and let's take a look at these possible trades. So the only one I want to take a look at the first of the week is pound Swiss franc. Here is pound Swiss franc, and I want to pull this out on a daily chart just so you can see just how weak this has been. I know a lot of people looking at this are going to say, but Rob, it's already gone down so much. You're right, it has. And if you've used that logic, you've missed the entire move for the last 3 months. So at some point, you're right. It is going to finally hit a bottom and bounce back up. But remember, we trade the market in front of us. And if we're looking for a trade over the next 12 hours, 24 hours, this thing looks fantastic to the downside. We are really breaking down here. Had this little bit of a low base, descending triangle like right here. Once we broke down, we got a lot of momentum off of this bottom. Let's take a look and see if we can find some areas, and I might have to go back to like a weekly chart. And I'm guessing, yeah, here we are. We are right down at these really big lows that we hit post-COVID. So the pound is the weakest it's been against the Swiss franc since the lows and the depths of COVID. Okay, we could very possibly get a bounce here. If we don't, what's going to happen is we're going to get an extended push through that probably then leads to a significant bounce. So if you're going to trade this one, I think you want to be fairly short term and just say, hey, you know what? I'm going to trade the downside momentum right here, right now, fully knowing that we are probably within a day or two of a major bottom on this one. This is the only one I want to take a look at. Uncle, what do you want to take a look at?
Hey, Rob. Well, as we take a look at charts, I would say that there's one key takeaway from these charts is that this is traders market. I mean, there's a lot of back and forth. Certain things looks good on certain days, and then it just totally flip. I mean, there's just not a whole lot of continuity that you can find outside of the yen, which has been very consistent. But again, this is the markets that could just flip flop, and it's very important to be flexible with this kind of flip flop price action. So early this week or early going into next week, I think my primary focus is going to be the US dollar. And the premise is going to be around the US CPI numbers. If we recall last time, there was a surprise. The inflation wasn't as bad as people expected. That was a big, massive move that came off of it. So going into this one, I think the dollar is getting ready to move one way or the other. If you take a look at dollar yen, I mean, we got a nice little pullback here again after hitting that 145 area. But I think the dollar, Rob, if you want to just pull up the dollar basket, I just want to kind of point that out that as we go into the next week's CPI numbers, I mean, dollar did something surprising here. As we look at this chart, we are kind of testing the previous breakout point. And if we go on a 4-hour chart, which I really like to use as far as the momentum goes, I mean, now you can see we actually start to we just made a lower low. So this is not a good sign, especially if you're a dollar bull. But at the same time, dollar has been the safe haven play. That's one thing to kind of keep in mind is that, we are seeing the dollar pull back because dollar is really being moved with this risk on or risk off. So this is a risk on, a safe haven play. And then when markets switch to risk on, we could see some pullbacks here. So I think this outlook is really dependent on what market does next week. I mean, the question is this pullback in the dollar is a buy opportunity or is this going to be a sell opportunity? I think this is something maybe the CPI numbers will kind of decide which way it wants to go. But I really paying attention to this one. I would love to kind of see this rally a little bit, maybe test the previous kind of high or make a lower high then rolls over. I think that would make a perfect scenario. But the problem is that a lot of the yen and dollar crosses that we go to, like if you want to pull up a euro dollar, just on a daily chart, and this is going to be the same story across the board. Daily charts, I mean, they all are in a strong downtrend. And when you look at these charts and candlesticks, you say, well, is this a selling opportunity or is it a buying opportunity? I think this is where dollar is a bit of a tough trade because the technicals are not screaming buy, but they're not screaming sell either. I mean, this could be a selling opportunity like we see the euro dollar have a nice little wick. I mean, we are kind of shifting back and forth from this parity level. So I think what's important is to kind of figure out what the dollar wants to do. And it doesn't matter which pair you then pick. They all kind of looks very similar. I mean, we had Aussie dollar, which or dollar Swiss franc. I mean, all of these ones that if you kind of study, I mean, you won't be able to find a great technical setup. But I think if as soon as they get the momentum right or the direction right for next week, I think there could be decent opportunities there. Even Aussie dollar, I was actually really looking forward to this early this week as it was testing the June lows. And we actually just bounced right off the June lows. So again, if you look at the technical setup, we're still in a downtrend. We got a nice little candle here, but is this a bear rally? Or is this a reversal? I think we still benefit the doubt is that these are bear rallies. So if you want to stay on the right side of the track there, I think that's the right play. But again, I think I would like to keep a close eye on the dollar next week as after the CPI, see if the dollar actually sells off or does the dollar rally. If the dollar rallies, I think this could be just a buying opportunity. But if the dollar actually started to sell off and the market goes higher, I think then that's a scenario for dollar to even pull back further, because if the markets are not freaking out, then that's the safe haven play will then switch into something else. So that's my outlook. I think it's be a revolve around dollar. These markets, like I said, traders market, gotta be flexible, look out for opportunities. And when things are looking strong, when the velocity is picking up, I think that's a point to be active. Outside of that, be very careful because these markets can turn around really fast. So volatility is what we are really seeing, which I know some traders, it's new for traders because now we are seeing movements that we actually haven't seen in the last couple of years. We haven't seen this kind of volatility where things are turning up and down so fast. So this is the current market condition. I think you guys just got to trade the markets in front of you.
Yeah, thanks, Ankit. And I would agree with you. This is a dollar play all week long. And I think just like this week, you could be long dollar on the first part of the week and short it on the second part of the week or vice versa. I think the dollar is the one to trade. And then you just look and see, okay, if I want to be long dollar, what do I want to pair it up against? Probably something like the yen. You want to be long dollar, dollar yen to the long side, looks good off of a pullback. If you want to be short dollar, then maybe you take a look at the Swiss franc, the euro, or the Aussie against it. But I'm with you right here. This is a dollar play all week long. Let's wrap this up. We have to consider this a bear rally at this point. If the markets can strengthen more and get up above the 20 and we get lots of bullish technicals, then we'll have to say, hey, that was actually a bottom. We're now more likely in an uptrend than a downtrend. But for right here, right now, we have to take this last 3 days of a rally as more of a inside the context of a slightly bearish market. Tuesday, CPI numbers, as Ankit said, will change everything. So be cautious trading around those CPI numbers. We like taking trades after those numbers much more than taking it right before those numbers. So just be cautious on that. Wednesday, we'll be meeting live as a firm as usual, so come join us there. And really, that's going to be it for live classes this week. Thank you so much for joining us. Have a great weekend. Stay safe out there, and let's go make some pips this week. Goodbye, everyone.